Hello, this is Mike Swanson, WallStreetWindow.com. I've got a very special guest with me today. I'm speaking with Matt Morris, who runs the website microcapmillionaires.com. How you doing today, Matt?
I'm doing really good. Thanks, Mike.
Well, it's great to talk with you. We haven't spoken in a couple months, and it's been an interesting time since we last spoke because the stock market kind of died out in August and September and then came roaring back to life after Donald Trump's election. In fact, that election caused me to make lots of changes in my investment accounts, the way I'm positioned. I, in fact, got out of all the short positions I had at the time and went long in sectors I thought were going to benefit from Trump and the programs he might be doing. So I'm curious, what's your feeling about the markets now with Donald Trump winning?
Man, it's the bulls are charging, huh? Yeah. Generally speaking, I mean, I guess the warning. There's some warning signs out there, like for instance, the magazine covers are starting to talk about a new bull market and stuff like that. But generally speaking, I mean, I'm in the same camp where I'm bullish, and I'm seeing the fruits of being bullish. From the results of my the trade alerts that I send to my subscribers and the trades that I place myself. So I mean, I have no reason to. Yeah, sure, we're probably going to pull back and consolidate a little bit. At least, hopefully, we do before the new year. So then there's still some gas in the tank, maybe come January and February. But yeah, overall, I'm definitely bullish. There's it seems like a lot of things. The market is totally more politically geared than I realized it was. Especially if you look at the financials, the XLF, ETF for the financials, Goldman Sachs, Bank of America, those stocks have just went straight up since November 9th. And so yeah, generally speaking, I'm bullish, and I look for more opportunities all the time, and I'm excited for not just 2017, but for these last couple weeks of December too.
Yeah, I think it can easily carry over into next year. The thing is, though, this week we've got a Fed meeting, and I was looking over the weekend at two things, really. One is that when you have a market like this just start to really take off, as much as the Dow's been going up, and you mentioned XLF and the bank stocks, I mean, they're like going straight up like rocket ships. And I think that's going to continue. But when you have that go on, often you'll see like quick dips, like a couple percent just over the space of a couple of days that kind of shake people out. And, nothing can go up every single day, right? And then we've got the Fed meeting this week. So I've kind of prepared myself mentally going into this week to expect some volatility either into that Fed meeting or the day of the Fed meeting, but sometime surrounding it. And also I'm looking at gold. I think gold, that can be a turning point for gold too in the mining stocks. So I think a lot of stuff could happen this week around that Fed meeting. And you put out a course earlier this year about how to trade the Fed minute. So I was kind of thinking this morning, man, this would be a perfect time to talk with you about this week's Fed meeting and how to take advantage of it or what to do, because it provides opportunities when you get bouts of volatility.
Yeah. So thanks for bringing that up, Mike. So, man, where do I start? It's something that I called it today in one of my emails my newest brainchild. So, but the Fed minute system is my newest trading. So I've been running my microcap stock service since 2008. But so this is my newest service, and it's not like I have a ton of services, but this is one of them. And so Fed minutes, what I realized, Mike, was that the Fed meetings and the results of those Fed meetings when they're disseminated to the markets is that it's a very much a binary event for the market. And something that you're very familiar with too, is gold prices, or specifically for the gold ETF ticker symbol GLD. So what I come to realize is that I begin to wonder earlier this year, way back earlier this year, if the results of those Fed meetings, if a certain type of trade, options trade that I put on, not super complex, so not anything where you need $1 million in your account to have it to be able to do it. But if you're, if you can do this trade where you can place this bet with options on the GLD ETF during these Fed meetings around these dates, where you can make money, number one, if it goes up significantly, or number two, if it goes down significantly. So you make money either way, right? And so what I kind of explain it sometimes is, my boys play sports. Baseball's going to be starting here in a couple months here in South Carolina, and so it's kind of like with my boys in baseball. Many times after they get done playing, I'll take them out for a milkshake at Sonic. They love peanut butter milkshakes from Sonic, and so we'll go there. And regardless of whether or not they win or lose, their team wins or loses, because I know they gave it their best effort. So I'm going to take them to get a milkshake either way, right? Win or lose. Well, you can kind of use that same analogy with using these trades on options. They're called straddles on the GLD ETF when the Fed minutes come out. Because what happens more often than not, at least from my experience, is that you either get a big move higher, it goes up for the rest of the day after the minutes come out at 2 p.m., or it goes lower and then continues in either direction that it established after the minutes came out the next day. And that's kind of when you break even and make a profit. So the idea is that if, say, for example, if gold were to shoot higher 1% after the Fed minutes come out. So what I'll do is I'll wait about an hour and say, okay, so I'll buy my straddle, say gold's at 110. So I'll buy a 110 straddle. And if it goes up, starts to go up, establishes that nice uptrend, okay, I will have, if I put $1,000 on the trade, my puts that I spent $500 worth of money on, $500 on, will be down $250, right? Because it's already started to move up. So boom, I go ahead and cut that loss. So I lost $250. Now, on the other hand, my calls have went up probably about an equal amount. So I'm about $250 in the green on the calls. So once I sold my puts, then to break even, I need the calls to go up a little bit more. And so what I found is that this is such a strong catalyst. The market reacts so strongly to whether or not they perceive the Fed minutes to be bullish or bearish for gold, is that move will continue. So it's not just a quick spike in one direction. It's going to be something that plays out not just for an hour or two, but usually, in many cases, sometimes for 2, 3, 4, maybe even 5, or a week or so worth of trading. So it sounds kind of like, oh, okay, that's interesting, but I mean, I actually have proof. I actually traded myself. And have, in one of my accounts that I use to trade these Fed minutes alerts, I mean, I've grown it, right around 600% in just around 6 months. So, I just launched this service back in June, Mike. And I mean, the amount of enthusiasm and loyalty from the people that initially subscribed is like anything I've ever seen. I mean, I think I mentioned to you earlier, the people that are actually taking the trades and are interested in the trades from 6 months ago when they first subscribed are still taking it. I mean, it's a lot of people lose interest. Oh, it's a bad trade. They lose interest, whatever. They quit trading. People are still trading alerts six months later. And so if you're watching this video, you're thinking, well, what does that mean to me? Because I'm just a trader. Well, take it from me that. When people are still interested in renewing a service, whether it's 6 months or a year later, that means, it's probably got some good value to it. So what I do is that for people that subscribe, Mike, is I give them an overview of the course. So I have a 6-module training course inside the members area. So they get a full understanding of what my methodology is. And I'll talk about a little bit more about that in a minute. But so they get a full understanding of the course, and they also get the buy and sell alerts via email and text message. So I mean, you really can't go wrong as in the respect of from the standpoint of you learn the strategy and you also get the alerts. And so I know that's one of the things with me is if I were to sign up for something, a trading service, yeah, I want the alerts, but I want to learn how to do it too. So that's why I made sure I did the modules that explain the course. But I've gotten, there's a page, where I have testimonials. I show the track record, all that stuff that people wonder about before they subscribe to a service. And so it's just really been I call it my biggest breakthrough of 2016 by far. And plus, it's a lot of fun, man, because instead of just, usually you turn on CNBC and you see Janet Yellen speaking, she's like, and the Federal Reserve, this and that, and it's really boring, it's like, man, you actually look forward to that because okay, I have a straddle, I have this options trade based, if it makes a big move one way or the other, I can make money. So, you're almost waiting with bated breath, what's Janet going to say, So it's something fun in addition, of course, to stock. And, Mike, you do a lot of ETF trades. And so, in addition to that, of course, this is a trade based off an ETF, but it is, it's with straddles. So the only thing I think that scares people off sometimes is when I say straddle, because then they think, oh man, am I risking more than I can? People wonder, is a straddle something where you risk more than capital than you put on the table? And it's not. So you only risk what you put on the table with a straddle. So the risk with a straddle and this strategy, and there are times where it doesn't. Year, so it's been working good, and I anticipate it to work again next year too, over 70% win rate. But it doesn't work. So you got gold right here at 110. If it shoots higher, you make money. If it shoots lower, you make money. You'll lose money on the straddles if gold just goes sideways like this, because then your calls lose value and your puts lose value, right? So I mean, that's kind of, hopefully that I in a nutshell, I kind of gave the broad overview. If you wanted me to, Mike, I have an acronym that I use that explains it more in detail. If you want me to share that, I will.
I'm going to show you something. I'm going to show you quick. And okay. That's a chart of the HUI right now, loaded up. And I just want to point out that I'm real interested in what gold and gold stocks do this week, because the volatility in them is shrinking on the daily chart. That pink line are the 20-day Bollinger Bands, and they're coming very tight together. When they do that, typically you see a big move over the next 7 to 10 trading days. So for instance, you can see the last time they did that was right before the election, and then the HUI fell from like 210 to 180. That's a good percentage move. It did that at the beginning of October, following another similar squeeze when the HUI at that time fell from 240 to 200, and then from February up to the August peak, these things would consolidate and get real narrow right before big moves up. So the point is that it would show you this would precede nice moves over a 10-day period. And this 20-day Bollinger Band indicator on the bottom, I've got the width indicator, which shows you how wide or narrow the bands are, and it's below 10 right now. That means those bands are super low, which is telling us the volatility is really low in the daily price action. And when you get low volatility in these indicators or in a ETF in the market, typically that's a great time to expect a move to come. So that's why I think like the type of trades that you're talking about with gold seems to be like, this is a great time to get involved.
Oops, I was muted there.
Yeah, there you go. Okay.
You can hear me now?
Yeah.
Okay, cool. Yeah, I didn't even look at that myself, Mike. Yeah, it's I think anytime you have the technical analysis stuff kind of line up in conjunction with the with the news cycle, I mean, you really have potential for an explosive directional move there. And so, that's what we're sitting on right now. As a matter of fact, this week with the Fed meeting, And then there's also, kind of throw this in there, a bonus for all of you who've watched, the video to this point is there's a trade I take in the new year, and so I did this last year and it worked. And so I'll do a straddle going into the new year, usually on the SPY ETF or the QQQ. And I did this last year, and if you remember, the markets tanked last January. So yeah, I lost money on the calls, but I made a lot of money on the puts. There's just something about the new year. I don't know what it is, but it's very binary. There's a lot of fresh money coming in the market, and whatnot. So that's kind of that's going to be the trade that I take, that I alert for the Fed minutes, for my Fed minute subscribers come last week of the year.
Well, to see how the market lines up between now and the end of the year, but if we don't get a significant pullback, I wouldn't be surprised if there isn't one the first week or two of January, because I think there's a lot of people out there saying to themselves, why do I want to sell now anything? Because I could just carry my taxes over, and then they might be waiting until New Year's to hit the sell button and ring the cash register. So that's something too, I think I got in the back of my mind, could be heading for that, and that would bring some volatility, bam, right after New Year's too.
Yeah, and then too, what people are going to be doing is the tax loss selling is going to I don't know. Last time we started talking here on this chat, Mike. I think the market was down a little bit or flat, but there's probably pretty good probability of a pullback between now and year end, because the tax loss selling is going to is going to be in full effect. Obviously, it hasn't been so far because the market's been straight up. So, I think, what it's going to do too is it's going to kind of coil that spring back up for the new year. So the market will make a directional move again, probably in January, February. So, yeah, so it's it's really probably, yes, I'll always love trading, cheap stocks like Fannie Mae and stuff like that, which we've been making money in, but this is always going to be something that I enjoy doing, because I've got it down to a science, so, and it makes money more often than not. And so, and there's always new opportunities too. Like every once in a while, I'll take a straddle on a stock going into earnings, which usually does not work because the options are so expensive on stocks going into earnings. Once in a while I will. And a few quarters ago I did on Netflix, and then Netflix tanked, and the puts made way more gains than I lost in the calls. So yeah, it's I'm definitely hooked on it.
Yeah, it's fun. Well, I think the market's more fun now than it was a few months ago. I really thought, the volatility shrank, the volume shrank, the market was trading like nothing, like it was dying out in terms of action in August and September. And, since the election, it's come back to life. In fact, it almost feels to me a little bit like it did in 1999 and 2000. That's when I first started in the market, and it was going up like this, and I could find stocks that are breaking out, doing all kinds of stuff, and I'm seeing that happen now. So it is, a lot more fun, than it was a couple months ago, for sure.
Hopefully we have 5 more years of it though, Mike, before it stops.
Well, that might be too much to ask for.
Yeah, 5 years is a long time in traders perspective.
Yeah, well, I'm just, it's kind of, this is an interesting week, and we both got kind of game plans in place, all set up, and people can, can work and make their own. And I think your Fed minutes can really help them do that. And then next year will be a different year, and we'll see what's going to happen from there. But the basics of the system, though, I think do apply to, not just the Fed meeting, but as you mentioned, New Year's or other periods where,
Right.
events or something that you can expect to move the market.
Yeah, there's another example too that I alerted to my Fed minute subscribers as a bonus trade, because obviously it has nothing to do with the Fed. But we did a straddle on the OPEC meeting. So we did a straddle on the USO ETF, which is the oil price ETF. And so we did a straddle on that. And if I remember correctly, I think that weekend after that OPEC meeting, when they announced the surprise production cut, I believe oil gapped up almost 10%. And if you zoom in on that chart a little bit, you can probably see the gap. But can kind of see it right now.
It's up a lot today too.
Oh yeah, well today's got was another production cut agreement from non-OPEC countries. So, but of course the big one was the OPEC deal. And so you see the U.S. was up 3% today, but that day after OPEC meeting, it was up, I want to say close to 10%. At least it gapped up that high. And so, you know, we did good, man. I made, on the trade, it was a net of 50%. So, you know, I think I used about $4,000 in my trade or something like that. And, you know, ended up making $2,000 overall. So I made, you know, the $2,000 I put in the calls ended up being worth let me see if I can tell you right here. So the calls then would have been worth, they went up 200%, I think. And so I made, so $6,000 and then, no. I don't know. I can't do the math in my head right now, but you know, I made enough on the calls where after I subtracted the loss from the puts, it was a 50% gain. So putting $4,000 into it, I still made $2,000 after the loss on the puts and the gain on the calls. You know, you did the subtraction there. So the addition and subtraction. So, you know, and last year I made that trade too. But the year before that was, you know, was kind of timid. The year before that, 2014, huge, which is kind of how what I started watching for. So, but so those opportunities that pop up like that throughout the year, and sometimes you know, if I spot them and I'm confident in them, I'll alert them as a bonus trade to to my Fed Minute subscribers.
Yeah, definitely. Well, I'll let you go. I know you got other stuff to do than just talk to me all day. But after New Year's, hopefully we can pick this up and do some more videos about what events are going to be in place next year, because we're going to have the inauguration, we're going to have State of the Union, we're going to have more Fed meetings, even that might even be more consequential on this one, although the first time that they're raising rates in a year, so this is going to be a big one. But we're in for some fascinating times, I think, in the global economy and the financial markets period. So thanks for taking the time to talk to me and everyone else.
Yeah, Mike, thanks, man. As always a pleasure to talk to you, man.
Well, we'll talk to you later.
Okay, man. We'll see you.